Okay, welcome, welcome all. Welcome to Financial Fitness Program. My name is Samir Bapat, and today we are going to learn about secrets of mutual funds and how to identify a good mutual fund. How many of you have already invested in mutual funds in the past? You have been investing in mutual fund. Can I have yes from all of you if you have been investing in mutual funds? Yes. In small case, okay. Okay, small case, yes, okay. Lot of people are there in mutual fund. Very good habit, and very like if we don't have time, why we typically would like to invest in mutual fund is because of like we are learning some things and we are understanding stock market in the meanwhile, and if we don't have time to analyze or we don't have a flavor to analyze, still we can go and invest in mutual funds. So mutual funds are in a way a very good mechanism to earn at least good returns, 15 to 20% returns annualized. It's a very good tool to invest into, and that's why it is very important to understand how to shortlist a good fund, rather than after 3 years if you realize, oh, I did not invest in a good fund. It is better to understand how to analyze a good fund and put in a good fund and monitor it regularly. Second point is, even if you are investing in mutual funds, it is very important that you at least have a tab on it every 3 months, how the performance is doing, how it is doing with compared to other funds and all. Every 3 to months 6 months you have to analyze. So before we let's straight away jump into the analysis of mutual funds, how to find good mutual funds. uh, this webinar is divided into two parts. First, I'll take you through some basics of basic theory of the mutual fund, how mutual funds are classified, how they are organized in a way. And then once we understand how they are organized, how they are classified, it will be easy for us to find good funds. So, okay, so let's go ahead. Now, how many of you have heard these three sentences? Mutual funds returns are subject to market risk. Read all schemes document related carefully before investing. Past performance is not indicative of future returns. Have you heard these sentences? Yes. And believe me, they are telling you the truth, because they are telling you upfront, boss, it can go down. Okay. Don't think that if you are investing in mutual fund, it will just go up. It will go down. If the market is go down, mutual funds will go down. Second is, read all scheme related documents very carefully before investing. And this is where I'm going to stress for today's session. Third is, past performance is not indicative of future. So let's deep dive. Now, first of all, advantages, like I said, advantages is diversification. Diversification means, if I am a small investor, if I have, let's say, I have to invest only 10,000 rupees per month. With 10,000 rupees, I'll be able to invest maybe in one or two or three shares, because nowadays all the shares are almost 1,000 rupees or 2,000 rupees. I'll not be able to buy into bunch of shares which I think might go up. So mutual funds give me advantage of, or opportunity for diversification. So with small amounts also, I'll have exposure to lots of stocks. Economics of scale, lots of people are investing, so as a collectively it becomes economic of scale. Like nowadays they have a new hep word called crowdfunding. The mutual fund is also crowdfunding. The entire crowd comes together and they buy the share. Low cost, convenience. You can you don't have to really observe, monitor the all the shares. You are it's like hiring someone for monitoring that. Flexibility. Disadvantage, what is the disadvantage of uh, you are telling this in 10x slow speed? We heard it in 10x speed in all ads. No, Prakash, I didn't. Maybe Prakash, you are typing, you are telling this in 10x speed, slow speed. We have heard it in 10x speed in all ads. I am not able to get what you are saying. So maybe something different. Okay. Acha, acha. MF warnings. Okay. Okay. At very fast pace. Okay. Okay. I could not correlate even. Okay, great. Yeah, yeah, understood. So it's very inspired and it is very, very important. Okay. Disadvantage. Now, the biggest disadvantage is there are only 4,000 stocks in Indian stock market. Okay, there are only 400 companies, listed companies in Indian stock market, but there are 3,000 mutual funds, almost 3,000 mutual funds to choose from. That makes the life very, very tough. For me personally, I prefer selecting stocks rather than mutual fund, because selecting mutual fund is a tough job, and we'll try to decipher it in some way so that we are able to get some good mutual funds to invest into. Then common investors are not aware of investment objective. Diversification, again, you the returns are limited. They are not very super duper 100% 200%. Consistently, year over year, you will be able to make 20% 30% from mutual funds. And again, convenience, because it is convenient, people keep on putting SIP and then they don't monitor whether their mutual funds are meeting the investment objectives or not. So convenience is an advantage and convenience is a disadvantage also. So both the things. Now, mutual funds collect money from investors, and investors money in different asset classes as defined by investment objectives. So how many of you who have invested or who have been investing in mutual funds know the investment objective of the mutual fund in which you have invested? Can I have yes from all those of you who know the investment objective of their mutual funds where they have invested? Okay, so I have one yes. Name suggests it, right? Okay, so no, name can be anything. Name can be anything. Name can be misleading. Future opportunities, and they'll invest in Reliance only. Okay, so it's the future opportunities fund. You'll think that okay, they are investing in some upcoming companies and they will invest in existing, right? So this is very, very important. Investment objective, you should know about your fund. What is their investment objective? It is in their what we say in the offer document. So I told you, right, first sentence, read the offer document carefully before investing. They are clearly telling you, please open our offer document. We have mentioned our investment objective. It is clearly mentioned, whatever our name may say, but our investment document will tell us what is investment objective. Why I am telling so is because, see, name can be anything. Future, some future fund, tiger fund, lion fund, everything, anything it can be. But in simple terms, if the investment objective, you have to understand it very clearly, carefully, because sometimes our expectation and what the fund is having investment objective may be very different. We go on the name and their investment objective may be very different. They might say, if a fund manager investment objective is large cap companies, big companies, right? So if the investment objective of that mutual fund is to invest into large cap companies, then even if the fund manager comes to know that there is a small cap company which is going to do wonders in coming days, will he invest in that company or will he not invest in that company? My question to you all is, he will not invest, right? He will not invest in that company because his investment objective is to invest in large company. His portfolio has to be investing into large company. There is a something required. That's why he has started that large cap. If someone is investing in small cap, he comes to know about large cap, he will not invest in large cap because that is not an investment objective. If someone is investing in infrastructure, let's say oil and natural resources, then they come to know about the Infosys of tomorrow. Even if the fund manager comes to know about that Infosys of tomorrow or TCS of tomorrow, they will not invest into that, because their objective is to invest in oil and natural gases. So we should not think, okay, I have invested in the mutual fund, he will take care of everything. Yes, Kailash is asking, does fund manager share this objective to investor? Yes, he has to share in the offer document. That's why before investing, we should be opening the offer document and reading it, okay, where they are going to invest. Sometimes they'll give some, if the fund is giving you a very open-ended investment objective, believe me, that fund itself is not very sure what they are going to do. Whatever they may keep the name. Okay, more clarity they give, better it is, that well defined for that fund. Because there are lots of fund who are giving open investment objective, we will invest to a very good opportunity and all, we will invest. But no, then they are hoodwinking you. Don't invest in such funds. Where it is available, we'll come to it as we go further. So first, let me explain you what are different investment objectives, and then I will explain you where to look for it. Second is, it is managed by fund managers. Okay, now how many of you think that the investment in mutual funds is done by a robot? Robots are there which will invest in funds, or the companies are selected by a human being with having some analytical skills. He has some vision, and he thinks he has to analyze something in future. Okay, this is likely to happen, this is going to happen, and let me invest in this companies for a better future. So do you think that fund manager plays a huge role in determining whether the mutual fund will be profitable or not? How many of you agree that future? If you agree, type yes. If you agree that fund manager plays a very important role, because it is based on his vision, his outlook of the future, how it is going to turn out, what may be the future, how, what will work, what will not work, and then he will give the profitability. Yes, can I have yes if you agree with me? Can everyone type yes if you agree that fund manager is the one who is real driving force, right? Once the fund is given to him, then he is a driving force behind it. Now, my second question to all the people who have invested in mutual funds: do you know what has been the performance of their fund managers? Because one fund manager will not only manage one fund, he may have multiple funds for many years. So how many of you have gone, those who have invested in mutual funds, how many of you know what is the performance of their fund manager, how he has been doing in the past? Can I have yes from all of you if you know? You have gone and analyzed what was their performance? Yes, no, okay. Sometimes analyzed, not really, no, okay. So this is second thing which we should know. If yes, very good, that is the way to go, and that is what uh, okay. Normally what sort of he takes decisions only, and there is a team who takes decision where to invest. Yeah. Yes. So Kailash is asking experience of fund manager. It carries a lot of weight. He is the real brain. He gives the vision. He gives his team where to how to analyze companies, where to analyze. Then their team comes back. Then he takes a call. See, it's a probability game. Any mutual fund, any investment in stock market is a probability game, and high probability wins the game. No one can guarantee how it will turn out. It's a probability game. So it's a fund manager's vision which will make or break, which will make the lot of difference. Doesn't matter whether he has to be not from IIT-IIM. He should have a good vision, and he should have shown that vision consistently in the past. So when you are analyzing any mutual fund, even if you are attending this webinar just for this much time, take two things from here for sure. One is, you should be very clear what is the investment objective. Don't go by the names can be deceptive. You have to go and open their offer document. There is a section called investment objective. You should be reading in the offer document investment objective. You should be in line with that. Second thing is, they will give the name of the fund manager. Go and see how that fund manager has been doing in last 10-15 years. Has he been performing consistently in other funds also? If yes, then go ahead and put your money. It is your hard earned money. Everyone okay? So far so good? Yes. Learned something new? How many of you have learned something new today for mutual funds? Yes? Okay. Okay, great. Thank you. So let's move forward. So mutual fund is a trust, sponsored trustees, asset management company, custodian approval, and SEBI. Now, how many of you think that this asset management companies like HDFC, SBI, Investco, DSP, they run mutual funds for charity purpose? Are they running the funds for charity purpose? No, right? So we have to keep that in mind. Some people, when they go through the fees, they analyze the mutual funds basis how which fund house is taking lower fees. Believe me, a good person will always have a higher fees. So don't. I have seen people, they'll say, okay, AMC, this AMC is having low charges, or even the bank people, they will come and say, no, no, sir, this AMC has a very low annual maintenance cost. But why it is low? Are they not having good quality of analysis? That's why they are taking less fees for me. See, anything which is having lesser cost, or they are cutting their profits just to compete, be careful. Okay, so let's go through quickly the types of mutual fund. Now, open-ended, close-ended, interval funds, exchange-traded funds. Now, point number one, please note down, you should mostly, preferably buy only open-ended funds, because you can enter that fund easily and come out of that funds easily. Okay, so make a note, there are multiple types of funds. Types of funds means it's not it's a open ended, means you can buy any day, you can sell it off any day, within 2 days you'll get the money. Close ended is, if you buy it, there is a lock in period of 2 to 3 years. You can exit only after 3 years or 2 years, whatever is the lock in period. So in case in between you have some requirement of money, or that fund manager is not doing properly, or he's not managing the fund properly, you cannot exit before the stipulated time. So open ended, close ended. Interval funds means you can redeem only in few stipulated dates only, that only you can redeem. You cannot buy, you can buy or redeem only on these days. Interval funds, not use. Exchange traded funds, once they start, you can buy and sell in exchange. My recommendation, those who are starting new, look out for open ended. We will see where to see open ended. Just note down open ended. I'll show you where to look for it. If I forget, just remind me. Okay, now second, investment objectives. Okay, investment objectives. Now what you should be looking at the investment objectives, and you have to understand what is the investment objectives. Okay. Okay, Sandeep is saying tax saving funds are close ended funds. Yes, tax saving funds are close ended funds. Yes. So ETF is exchange traded funds. Once they start, they can be traded like shares on the exchange. That is the exchange traded funds. Okay. Now, let's understand the investment objectives, right? So what we see, first of all, when you are investing in mutual funds, you should be clear about investment objectives. You have to understand what types of investment objectives can be there for a mutual fund. Okay. Okay. So first, let's understand what are the types of investment objectives which can be mentioned in the offer documents. Once you know, you will understand which one to select. Okay. Now, first is equity. So there are mutual funds which will invest only in shares. So that is the higher level umbrella. Now, within equity also, in investment objective, they can write, okay, I will invest in shares of the company only, but I will invest only in large cap. Large cap means big companies like HDFC Bank, Reliance, which have market capitalization of 7,000 crores and higher. Okay, so these are the big companies. Just imagine like big huge companies are called large cap. Next on Thursday I will discuss more on large cap, mid cap, small cap and behavior of those companies. Today just understand large cap is a big company, so they will say, oh, okay, I'll invest only in large caps. That means they will invest only in big companies. If they see a small company, upcoming growing company which is small, having a small capitalization, they will not invest, they will invest only in large cap. Okay, second is mid cap. So something between small cap and mid cap. So some investment objectives, they'll say, okay, we will find good companies in small cap. Someone will say, okay, mid cap, large cap. So this is one classification. This is a very general. So many mutual funds will be saying, okay, I'll invest in large cap, mid cap, small cap. Then some mutual funds will come, they'll say we'll have multi cap, we will have anything, whatever we feel, small, large, mid, we'll invest anywhere. So these are they can invest in any of these, large, mid and small cap. Now we will think, okay, it is better to go in multi cap and then we can have a different output. No, it is not like that. Now mutual fund investment, you have to map it with your own requirements. The very thing for any investment is you have to understand yourself, your own requirement, why you are investing in mutual funds. If you want to have a exposure in equity, but you don't want to have a loss side, you have to keep it. You are okay that profit may not be huge, but you want that, okay, profit is decent, but loss should not be more. Then you should go for large caps because they go up slowly and come down slowly. These are huge, big companies. They are like elephant. So difficult to, like, it will take some time to pick up the speed to go up, but also they are like sort of foundation of the economy. So their shares also fall very slowly. So if your investment objective is that, okay, I'm okay with less profit, but I don't want to risk much also, go for large cap. Small cap, they will move up fast, move down fast. So their upside is good, downside is also very high, mid cap is in the range. So why I'm saying large cap, mid cap, small cap, and you should not go to multi cap ki jo uski इच्छा हो कर लेगा, ऐसा नहीं है. You have to map your investment requirement, right? We have 100 people here, 100 people might have 100 different investment requirements, money requirements going in future. So you should select that. Then we have multi-cap, then we have sector. I'll explain the sector again. What are the sectors of Indian economy? Thematic, again I'll go and explain thematic also, and arbitrage. Flexi cap is multi-cap, yeah. Okay, now how many of you have seen my video on that emotionally money and investment money? I recently uploaded and I shared the link. Anyone has gone through that and seen how to work out? Okay, not yet. Okay, I'll share that link also. See, basis your requirement, you have to plan how much money is required, when is required. So you have to plan it out. So what is thematic and arbitrage? Okay, so let's go ahead. Then funds of funds. Okay. Now one is the large cap, mid cap, so big. Now second is second classification. Investment objective of mutual fund is sectors also. So these are the sectors: financial service, energy, IT. Can you give some names of IT companies? What we have IT sector? Can someone name few companies of IT? Can you type IT sector names? TCS, yes. Infosys, Wipro, great. So IT sector will invest into that. So if you want, okay. So what is the sectoral funds? Sectoral funds will invest into IT companies. So IT sectoral fund will invest in IT, Infosys, Wipro, TCS, whichever are the good company. energy sector, mutual funds will invest into Reliance, ONGC, IOL, and all. Consumer goods, they will have HUL and all. So depending on, let's say, if you are not very keen, I will leave it to fund manager, whatever he wants to buy, let him buy. I am bullish on some certain sector. For example, because of corona and because of work from home and everything, now people have, or business houses have suddenly realized is that there is a huge potential for online services, going online, having virtual offices, and so they suddenly have started making it much better and better and secure. So going forward, at least for next 2 to 3 years, when they are making all these things, work from home, everything, and they are thinking in a lot of multiple dimensions in IT, with AI coming in, IT will have a good potential. So if you want, okay, if IT is going to have good potential, I will invest in sectoral fund IT. Or if you think EV is coming, you can go for automobile sector. Okay, whichever mutual fund is investing in EV, you can invest in only in EVs. Construction, metal, pharmas. Right now, the keyword is PSU. Government is diversifying the PSU. You can go and invest in PSU. So you can decide. So if you are not going purely on large cap, mid cap, small cap, you can decide based on your analysis which sector you have to invest into, right? Okay, now equity shares, we have thematic. Now what is the difference between sectoral analysis and thematic analysis? A theme is different than sector. Okay, pay attention. A theme is different than sector. A theme is, let's say, infrastructure development, like what I have mentioned on the slide. There is an infrastructure development. Now, infrastructure development, let's say roads only. If you see only roads, then roads will have project companies. It will have construction material companies. It will have financing companies. It may have maybe like, so this type of companies. So it's from different sectors. Companies will come which will be more focused on that sector, like infrastructure development. So IDFC Bank, Infrastructure Development Financial Corporation, IDFC is Infrastructure Development Finance Corporation. They are specialized in financing the infrastructure development. So that bank will come. Then you have companies which are constructing the roads and all infrastructure. Those companies will come. Project companies like L&T and all will come. So different sector companies will come and they'll be working for infrastructure development. So any fund which is investing in infrastructure development will be investing into the companies which are predominant, which have, like, which are good in infrastructure. It will be investing in that. So thematic also is very powerful. Thematic is more powerful than sectoral funds, because theme is working on something which is going to happen. How many of you agree that there is a great push for infrastructure development by Nitin Gadkari? Yes. How many of you are reading some WhatsApp forward will come, Nitin Gadkari's WhatsApp forwards will come, a lot of forwards will come. So, right, so infrastructure development. So if he is a powerful minister in Indian government, and if he's pushing so passionately infrastructure development, he will do something in next 4 to 5 years for infrastructure. And if he is pushing for infrastructure, then we have to take advantage of that, because he's working hard for infrastructure development. We can as well go and invest in infrastructure development mutual funds and take advantage. No one is stopping, right? Yeah, absolutely right. Kailash is saying if we feel a particular shorter sector will do good for short term, like 2 to 3 years, yes, we should consider. That's what the whole objective, right? That's why we are in this webinar today, how to select good mutual funds. Correct. That's why we are here in today's webinar, how to select. So we have to understand, we have to have a vision. See, any investment in equity or mutual fund, if you are not having a vision, what may happen for 2 to 3 years, then it is very difficult to earn in this market, equity market. You need to have some vision what is happening around you: rural electrification, export services, commodities, global funds. So these are thematic. Apart from that, tax saving, I'll not go in tax saving, equity, and I'm not very big fan of tax saving and all, so I'll not go into much detail into that. Non-equity shares are income debt, debt funds, gilt funds, and liquid funds. These are sort of safe funds, secure funds. They give anything. Liquid funds will give you a return of 6 to 7% annualized. Debt funds will give you anything between 10 to 15% annual returns, and gilt funds will also give you anything between 10 to 12% in a year. So these are safe, secure funds, sort of as secure as FD if you analyze properly. So these are the fund. Then mixture of the two, it becomes hybrid, right? Equity plus debt plus gilt liquid becomes balanced funds, monthly income plan, and capital. So balanced fund will have some portion invested into debt, gilt, or liquid, and some portion in equity. So again, people who are risk averse, people who don't want to take much risk, they are okay with decent returns, want lesser downside, they should go for balanced funds. Okay. So direct plans, regular plan. So there are two investment plans: direct plan, regular plan. Direct plan is you go and buy from the fund house website directly, so the charges are little less. Regular plan, you go through the brokerage houses, they will charge there some brokerage to allow you to buy. So this is direct plan. Regular plan, if you have time, go and buy funds from mutual funds from directly from the website of the fund houses. If you are having a broker, you can use the broker. Regular hardly makes some small minor difference, it will be there. So investment options are growth, dividend payout, dividend reinvest. Now don't go for dividend payout or dividend reinvest mutual funds. Go only for growth funds. Don't invest in for there will be option dividend payout or dividend reinvest. Don't go for it, because now dividend is taxable in the hands of person who is receiving the dividend. So if you are getting the dividend, it will become taxable. So, and it is of no major advantage. So go for the growth options only. I'll tell you what is the growth option. Okay, so other costs involved are entry exit load, recurring expenses. Like I said, AMCs are not doing it for charity. They will have annual maintenance charges, which is included when you are buying it. Every year they'll take around 2.5% charges to manage, right? Fund manager also has to get salary. And from where he will get salary? By managing your funds, and by charging every year, they'll charge 2.5% from you to manage the fund. That is how his salary comes. So these are the charges, but you don't come to know, because that is adjusted in the net asset value of the mutual fund. Brokerage and transaction charges. How to select mutual fund? So I'll go through them and you take a snapshot of it. Okay. Now, Ankur is asking 2% of what? Whatever, like if you are investing 10,000 rupees in a mutual fund, they will charge 2.5% of 10%, 10,000. So if you are investing 1 lakh, so 2.5% maximum, it is a maximum outer limit. It's within, normally funds are charging 2% for management. So your NAV will be adjusted as per that. If you are investing 1 lakh rupees, they will charge 2% for manage that fund. Okay, these are the annual like every year they'll charge, and you will not come to know. There is not mentioned in the statement. It is part of AMC. Okay, so yes, Manish is asking, it's annualized of whatever is the annual fund value. Whatever is the annual fund value, whether you are in profit or loss, they will charge and adjust the NAV accordingly. So how to select a mutual funds? So define your emotional money and investment money. First of all, first step number one, finding a good mutual fund or a mutual fund which will suit you. See, we are almost 100 plus people in the webinar right now. Not everyone's requirement will be same. So step number one, to select a mutual fund, first you have to identify what is your own requirement, what is your requirement, what is your investment objective, time horizon, and how you want the return, what is your risk appetite. Some people are risk takers. Some people think they are risk takers, but when they actually see the losses, they are not very uncomfortable. They start getting little high BP and all. So it's okay, it's natural, right? I'm not saying if you are having losses, you are having BP, it's not good. I'm saying it is good. That shows you know, understand yourself. So first, if you are having a high BP because of some high losses, identify yourself. Okay, I cannot take much risk, I will go with this type of funds only as described. Okay, now define first. So for step number one, to find a good mutual fund, you have to define yourself. What is your emotional and investment objective? Emotional money should be put in safe instruments. If something is needed for the near term, in within 1 year, 2 year, if you have some expenditure requirement, better to put in safe instrument like gilt, liquid, or gold or debt funds. That money you should be investing in those funds, so that the principal amount is not disturbed. Maybe returns may be little less, but the principal is secure almost. For investment money, define how much returns you want and the risk appetite you are having. Then do some research and analysis on what business is likely to work in future. We'll go through them. Then also check which sectors government is focusing to improve, start new projects, or give subsidy from the project. So right now, government, as we all know, government is focusing. Nitin Gadkari ji is focusing on infrastructure. Government is focusing on PSU diversification. So if the government is focusing on that, they put lots of money, right? They put lots of focus, lots of energy. It is always better to know what is happening in budget, where the government is going to focus, and select accordingly. So you will be on the right side of the government thought process, and you'll be able to take advantage. Renewable electrical vehicles, fantastic. So these are all focused of coming up. Then find the mutual funds catering to those requirements. How we'll check out, right? Check in which companies they are invested, check the fund manager's performance over last few years, keep a close watch whether objective of analysis, expect returns in performance is matching or not. So every 3 months you should be reviewing it, and general trends of the market and sectors you have. If you want, you can take a snapshot of these points. Please do it. So because see, I'm telling you, analyzing a mutual fund is little tougher than analyzing the stock. Okay, so you have to go through all this. There is no shortcut to success, as they say. Okay, taken the snapshot. Okay, so let's go ahead. Now, don't buy any mutual fund on basis of past performance. This is very, very important. Don't buy any mutual fund on basis of past. Past is past. Past should be good, but you should have belief in the future investment objective also. Okay, and then buy just because advisor has recommended. Now, here is one thing. Take advantage of your bank advisors. Okay, how many of you get a call from bank advisor, sir, I want to come to and meet you, and we have very good investment opportunities and all, and I would like to discuss with you. How are you getting any calls from your bank wherever you have salaried accounts and all? They will know how much money you are having in account and how much it is lying idle, so they would like to sell. You get right? So first of all, point number one, and that's what I used to do it earlier when I used to invest in mutual funds. I used to do it. Now, first thing you have to think and keep in mind always. Of course, I'll take you through how to invest in stocks on your own, but this is also one of the shortcuts which I used to use for a long time. See, what happens is the people who are coming from bank, okay. So one thing is, Anita just type, they say investment insurance in unit linked insurance plans. For that's what I was about to say. What whatever your bank agent comes and say, he will first push for unit linked insurance plan. He will say, okay sir, you are, this will happen, that will happen, what will happen to family and all. Nothing is going to happen to you. So first thing, tell him, I don't want to buy unit linked insurance plan. If you want to come and sell me mutual fund investments, please sell me. Okay, so let him come with that incentive. Second thing, okay. Second thing, if he says, sir, this is fantastic, if he's trying to pressurize you and create a urgency that if you don't invest in today or tomorrow, this opportunity is lost, don't invest in that fund for sure. So ask him to come. So what, how we should take advantage of these people? Ask him to come to your office. Ask him to get 4 to 5 good mutual fund schemes. Tell him not to tell the past performance of the scheme. Ask him to present, once he comes to your office, ask him to present what is the future of this scheme. What is the investment objective of the scheme? What has the fund manager done? What is going to happen in future? Because these people have the reports. They are not investors, but the people from bank, they have been briefed about what is going to happen in future. They have back-end team which tells them, and you also call them and take advantage, you know. So if you call them in lunch hour or after maybe some afternoon, you can call them and just have a word with them. What is the thought process? What is the funds they are thinking are going to do good in coming future? Just understand from them and do your own analysis and invest on that. So your time is saved. You know, okay, this is what is happening in future, and you can always use their knowledge and invest into that, right? So I did it for a long time. I used to invest. So I'm just giving you my input. So I used to call them. So they will be just kids, some 25, 26 years old kids. Nothing wrong in being a kid. They don't know. They have never done the investment. Don't worry. They have not done the investment. Just they will be getting some information. Just take that information and try to find out what their bankers are thinking about what is going to happen in the future. That's what our objective of them calling to our office and learning from them. If you like the fund, go analyze fund and invest. Otherwise, let it go. He'll come again. It is his job to come. Fine. Everyone like this tip for investment, how to find without spending your time, how to use other people's analysis for finding what is the happening in future and what thought process is going on. Okay, only one person liked it. Okay, okay, no problem. But you can use it. You can try it out. Okay. So, but don't fall into insurance trap. Don't fall into the trap. Nahi, sir, if you don't buy now, the opportunity is lost. No opportunity is lost. Don't go and buy so closed-ended funds. Don't go for tax saving schemes. Equity market is not for insurance. Equity market is not for something you will miss the opportunity. Equity market is not for tax saving schemes. Please be aware of all these traps. Okay, there are 3 traps I am telling you: insurance, urgency, and equity linked saving scheme, tax saving scheme. These 4 things, please don't go in equity market with these 4 objectives for sure. I am repeating again, if you have these 4 objectives: insurance, tax saving, equity linked saving schemes, and one more I said, don't invest in equity market. If you are having that thought process, equity market is not for you. Even mutual fund is not for you. Don't do that. Better put money in FD, that is secure there. Okay. So final, I'll go and then we'll go to the website and see some good funds. Okay. Now, total number of mutual funds in your portfolio should not exceed 8 to 10. I have seen people who have mutual funds more than 30 to 40 in their portfolio. You should not have more than 8 to 10 mutual funds. If you are having anything more than 10 to 12, that means you don't know what you are doing. You are just buying whatever recommendation is coming. You are buying that. Okay. So, so I have one question. How about ELS, equity linked saving scheme? I said saving schemes, it's not for equity market. Equity market are for the serious people to earn money. Okay, don't go for saving schemes, insurance, and tax saving and all. No, equity is not for that. Equity share market is not for that. Okay. Now, total number of mutual funds in portfolio should not be more than 8 to 10. How many of you are having 30 or 40 mutual funds in your portfolio? I've seen a lot of people. Yeah, okay. So that is a overkill, right? So then please go and analyze what these funds are doing. This is a overkill. You should not have more than 10 to 12. If we have many funds, how to decide which to liquidate? Start to remove whichever is not. If that fund is in your portfolio for more than a year and still it is underperformance, just sell it off and invest the money in some other fund. 10% of portfolio can be gold funds. So I'm just suggesting, what happens is, with all this uncertainty, gold fund gives you a buffer. Gold funds gives you a buffer. Funds where they invest either in funds of funds or in gold, they are investing. Gold funds will give you a buffer because gold is traditionally a hedging mechanism against the equity. If the markets go down, gold will go up. So your portfolio will have a balanced outlook. So it's only a suggestion. So whatever your capital, let's say if your capital is 1 crore rupees, at least 10 lakh you should be investing in gold funds. Okay. Then 20 to 30% in the sectors where government is focusing. So 20 to 30, every 1 or 2 years, government focus will change from something to another. Now, as we discussed, government sectors, government is focusing on disinvestment of PSUs. They are focusing on infrastructure. They are focusing on renewable energy. So if government is focusing on that, they will give a lot of incentives. They will give a lot of promotions for companies to work in that direction. So if mutual funds are investing into these three, it can be a good proposition. Third is 20 to 30 based on current trends like IT and all. They are having a good trend coming in future. Electric vehicle, a good trend. So we have to analyze the trends. So now 10 to 15% in gilt funds, debt funds, or liquid funds waiting for the opportunity. Okay, so this is how you can have a diversification. Take a snapshot and we will go and see how to see. Okay, so you have taken the snapshot. Let's go ahead. Okay, so current focus I have already discussed. We'll not go through it. Okay, so now we have understood. Now we have understood why they say mutual fund returns are subject to market risk. Read all scheme related to documents carefully before investing. So they are telling you whatever I have told in past, how much time? 50 minutes. Whatever I have told you, they are telling, okay, go and read our offer documents. If you understand all these things, then invest. And still, we will be not liable for future. Now, everyone knows moneycontrol.com. Who's saying screenshot? Okay, yeah, I'll take show the screenshot here. Okay. Take a screenshot. If everyone has taken a screenshot, you go ahead. Note it down. Yes. Okay. Great. So let's go to moneycontrol.com and see. I'll just go through the moneycontrol.com. And what about value research online? This is a website. No, you should always go and see the research. See, I'm not saying that we should not. I'm saying call the bank managers, call everything, take a judgment what is happening, go to value research, read what they are giving research, and then ultimately you have to take a judgment. Okay. Okay. There are lots of websites, and more websites, more confusion it is. So let's see. I'll just take you through. If everyone knows moneycontrol.com, this is one of the good websites. There are other websites also. For example, I'm taking moneycontrol.com. So can I have yes if you all know about moneycontrol.com? you have lots of websites. Okay, I'm just taking one of them. There are all good websites, they are all giving information. This is the best part of today's age. We have a lot of information which we can use. So in moneycontrol.com, you have to go to mutual funds. They have this head, click on mutual funds. You'll come on mutual funds, go down. Aa jao bhai. Then you have equity. Okay, so equity, if you click, let me see what they are saying. Kaha gaya? I just now saw here. Give me 1 minute. Why it is behaving like this? Just give me 1 minute. Huh? Ha, here it is. So, see, what we are talking about is categories. Okay, so here it is. If you go in mutual funds, it is showing top performing categories. So there are lots of categories which are mentioned, right? Equity, multi cap, what we have understood, large cap, and here is the 5 years performance. Okay, so you can see on an average in 5 years, if you invested 5 years ago, it's a compounded return. So more or less, all funds have given it's 15 to 20% returns over the 5 years. Agreed? Yes. So over long run, just a minute, give me 1 minute. Okay. Over the long run, you will find that on an average, it is possible to earn 20% from mutual funds. Yeah, it's an annual return. Now, what you can do is, of course, you can decide on large cap, mid cap, everything. I just wanted to take you through some examples of thematic, what we discussed about thematic. So you have this. I would suggest you go for thematic. You decide what is happening in the future and choose a theme. What theme is going to work in coming future? So let's say equity sectoral thematic. If you click, you will have, if you miss how I went, you can see how you have this DSP Tiger Direct Fund. Okay, direct plan. Now I'll take these two examples. Okay, one is the Tiger Fund Direct Plan, which is 5 years return is 16.5 and 21.84. Let's say we are assuming infrastructure will go up. Now how you'll see the differentiator in the two. Okay, 5 year it is giving 16 and Invesco is giving 21.84. So I'll click on this. It will open in one tab, and Tiger Fund I will open in another. So first of all, you'll have to go to their website and download their offer document to find the investment objective. Here quickly you can find how the fund manager has been performing. If you see, you can see the portfolio where they're investing. They're investing in L&T, Tata Power, GM infrastructure project. They are, see, this is thematic infrastructure. So it's a project company. Then you have power company. Then you have infrastructure making company, cement company, KEI industry. So different companies working towards infrastructure. All these companies are there. So it will have, if infrastructure is growing, all these companies will grow and give you good returns. Now let's go and see uh, who is the fund manager. Okay, where is the fund manager? Hold on. And you have scheme details. Go to scheme details, and you have the names of fund managers. Where is the name of the fund manager? Fund manager. Okay. See, in a document, you'll have to go to their website and then find the document. I could not find it on Moneycontrol, but it will be available on the Invesco India website. Okay, there you can find. Something here is, see, in expense ratio 1.46%. Okay, so they will be charging you 1.46% every year for managing the fund. So this is the expense ratio. Launch date is 2013. These are two are fund managers. So let's see how the fund managers have been doing in Invesco Infrastructure Fund, India Infrastructure Fund. Nilesh, how Nilesh has been doing. Can you see Nilesh's performance on the screen? Yes, no? This is fund manager, mutual fund manager managed by Nilesh. Now, okay, I'm just expanding. So if you see, he has been managing all these funds. His 3-year performance returns, whatever funds he is managing, is 94, 101, 103, 110, 26. On an average, all funds managed by him are giving greater than 26. Can we say his performance is decent? Yes? Okay. Why I'm showing this is as compared to, let's say, if we are comparing with DSP Tiger Fund. Okay, no comments on that. It's only a comparison. Okay, so if let's say open, let's see how he has been doing. And can you see the funds managed by Rohit on your screen? Yes, no? So you can compare, okay, how he has been doing, how his funds are being doing for last 3 years and 5 years. So you will have a comparative performance. Okay, both are of infrastructure. Which fund manager has been doing consistently how much return? So his returns on an average for 3 years are 24. Okay. Okay. I'll just pause for a minute. Okay, so someone is saying that last 18 months return have been high for most funds. And I hear this a lot. This has become a very common sentence now. Don't get stuck in that investment. There was an opportunity in last 18 months. Okay, don't forget there was an opportunity in last 18 months. Okay, don't, because this narrative is being set for many investors. Okay, there was 18 months, this was good, and but whoever performed was not a great person. But my question to you all is, even if there was an opportunity for last 18 months, how many used it? And let's see, if they have used it, they are good people, right? If they are not able to use it, then what were they doing? So why should I go with them? Right? Agreed? So forget this narrative, they were good, this were good. Every 3 years you will get a good opportunity. Okay, so it's not that last 18 months are good. I'm in market for last 14 years. Every 3 years you will get these 18 months which are very good. Okay, so don't think that because Corona it crashed down and it went up. Go and check 2008 crash. What happened? Go and check what happened in 2014. Go and check what happened in 2017. Go and check what happened in 2021. Okay, so I'm seeing this question repeated every time. Okay, no, last 18 months were fantastic. No, it's not like that. I am in market for last 14 years. I've seen such cycles many number of times. So don't get caught in this last 18 months. Many people are having this excuse, no, for 18 months are good, 18 months are good. No, it's not like that. Okay, believe me, every 3 years you will get such a fantastic cycle. So please understand this point, how to compare the fund manager. Is this okay with everyone? How to compare the fund managers? Yes. So whenever you are getting, whenever you are comparing, okay, so don't go with find the best fund manager and then see which fund they are managing. No, again, you are violating your own requirement. First, you have to analyze your requirement, then find the fund, then analyze which fund manager is doing good. The reverse engineering will not work in stock market. Forward engineering will work. First you have to understand your own requirement, then go. Okay, so you can go, like you can analyze the fund managers and see out of this sectoral thematic, like many are infrastructure and all. If you believe in infrastructure, just see, the name can be anything, but how it has been doing for last 5 years, how the fund manager has been doing for last 3 years, then see whether the whatever is the theme, is it going to last for next few years or not. If yes, go and invest in those. Analyze your objective every 3 to 4 months. If it is not growing with a steady trajectory, come out. Every 6 months, 6 to 9 months, you have to take a call. 6 months minimum you should stay with the fund. If it is not growing as expected, cut it off and come out. Now this was one. Then what other scheme is going on? Natural resources, right? DSP, natural resources. So there is a lot of thing going on, energy sector, and also you can go and analyze this. Everyone good? So far so good? Okay, so everyone can try it out. They can analyze the fund, and I want you to send me questions on WhatsApp, financial fitness group. Okay, great. So good question. So I said, see here it is mentioned open or open-ended or closed-ended. Scheme objective. It is a scheme objective, but it is better to go and check in the offer document snapshot. Open-ended, it will be fund size one. Okay, I'll come to this question where it's written type, where it is written on the top. Okay, I'll allow you to unmute. Just guide me where it is written. It has to be written. Okay.
Do a control F and you can just type TYP. You will
Achha,
get
that way. Okay, okay. Let me see. Command F and type. It's saying not found. Okay, somewhere. Okay, let me see. Open if it is. It's not able to find, but you will find, like when you are going to buy it, it will tell you open-ended, entry load, exit load, everything. It will be mentioned there, so you can select.
on the previous page. If you could just do a back.
Okay, so here scheme
Yes.
details, manager, launch date, expense ratio.
Next one.
Correct. So this is type is open-ended scheme. So you can enter anytime, exit anytime. Better to go for open-ended only. Okay, so if you have questions, please type in your name. We'll go through them one by one. Okay, I'll stop recording.